Hi there, good morning. You're watching Market Cafe on ET Now with me, Sneh Shah, and with me is Vinny Motiwala. Vinny, wishing you a very good morning. Now, this is a show where we're going to take you through everything that's been happening domestically as well as globally after the markets closed yesterday and all through the night while we were fast asleep. Bring you the latest updates from around the globe, and in the second half, we'll also get a little stock specific, tell you about which stocks to keep on your radar this morning and what brokerages are also flagging off. But with that, let's kickstart the show with the global handover. Vinny, US markets, tell us what's been happening. Mixed moves coming in, S&P crossing 5,500 but retreating a little bit as well. So tell us what's been up.
Absolutely. So that's what happened. 5,500 we managed to see on the S&P. The day before that was a holiday, and the last trading session for S&P actually managed to touch those record high levels. So yes, from that it's given up a bit of those gains, closed down 0.2%. We did see the Nasdaq too retreating and down almost 0.8% in trade. As of now, the S&P futures also are remaining just a little bit unchanged, so keep an eye on that. On the other hand, what we saw coming in was that the Dow Jones managed to see decent gains, was up almost 0.7% in a trade. So yes, Dow Jones was the outlier among the three benchmark indices that we have in the US market. Nvidia, that fell as much as 3.5%, mainly overall leading to the fall for the sector, that's the IT sector, as well as overall the tech index, that is Nasdaq. Because of that, we're seeing, because of Nvidia, we saw the Nasdaq saw a bit of a fall coming in there. So yes, that's how we're seeing in terms of the US markets. Not much of of an excitement that is coming in from a handover that we have from the US markets. But do not forget, all these tech stocks, at least in the US, Nvidia, especially that AI stock, was up almost 160% in 2024 itself. So yes, keep an eye out on that one. Moving on, I beg your pardon. We have the European markets, which actually saw a bit of an increase. European markets were trading much higher when you look at it. The DAX, FTSE, all of them managed to close with gains. European markets close higher. Why? Because Bank of England actually managed to hold the rates that they were talking about. So yes, there were no cuts coming in. There's no increase in rates. They're holding the rate. So yes, a positive sign on that front. And other than that, Switzerland has made the second cut. So keeping an eye out on the market. Other than that, SOX 600 was gaining provisionally by around 0.8%. The Bank of England rate is at 5.25%, which is continuing to maintain that rate, which is at a 16-year high for the company. And UK inflation also came in a couple of days back. That was also at 2%. We spoke about that yesterday. The 2% mark is what they have achieved. But will this continue going forward is something that we're keeping an eye out on. I just want to highlight in terms of the Swiss National Bank, because that was an important update that came in there. The Swiss National Bank is lowering its policy rate by 0.25% percentage points to around 1.25%. So this move was that was anticipated by most of the economists. That has come in now in place, and cutting a bit of the rates for the second time is an interesting bet to watch out for in the European market. So yes, that's how the global markets are setting up like. European, surely a positive handover, but US markets not much of an excitement, and that is why the Nifty implied open also indicating a bit of a muted start for the Indian markets. Not much of a cheer that we're expecting there as well. Crude, and what is happening on the gold front?
Well, very flattish moves coming in on the oil front as well, and crude oil futures have also slid early in this morning trade on the prospect of higher for longer interest rates in Asia and the United States, while falling US oil inventories kept prices from moving lower. Japan's core consumer prices last month, remember, gained 2.5% from a year earlier, and this is what data has shown this morning, growing from the previous month and keeping the country's central bank on track to raise interest rates higher in the coming months. Now, US data released yesterday showed that the number of Americans filing new claims for unemployment benefits fell in the week ended June 14, with broader strength in the jobs market persisting. Still, strong employment raised the prospect that the US Fed Reserve could leave rates higher for long. Now, higher interest rates typically weigh on economies and in turn on oil demand. So that's the entire play when it comes to macroeconomic moves, as well as the relation to how that pans out on the demand and supply for oil. Oil was supported by government data that was released yesterday that showed that a drawdown in the US crude stockpiles by 2.5 million barrels in the week ending 14 June to 457.1 million barrels. This is what the IEA has said, compared with analyst expectations and a Reuters poll for a 2 8.2 million barrel draw. So big difference coming over there in the real number versus what the street was expecting. Gasoline inventories of 2 fallen by 2.3 million barrels to 231.2 million barrels. This is what the EIA has said, compared with a forecast of 600,000 barrel build. So a big mismatch coming in those gasoline numbers as well. But when you take a look at what both of these indices or counters are up to, WTI oil is unchanged as of now at $82.2 a barrel, firmly above that 80 mark. Brent on the flip side, however, is as flat as it could be, less than a $1 cut coming over there, but Brent at $85.7 a barrel. That's where that is. So slightly above 85 is where Brent is, and firmly above that 80 level with $82.2 a barrel is where WTI is. But Vinny, lots to watch out for, even though it's Friday today. So take us through what's on the radar today.
It's Friday, but it's International Yoga Day as well as Music Day today. So we are keeping an eye out on that health and fitness front as well as your mental peace front on Friday. But a lot to watch out for on the domestic as well as global front. In India, we have the manufacturing PMI data in the Eurozone, also keeping an eye out. That's UK keeping an eye out on the manufacturing as well as service PMI data. And other than that, CPI data coming out in Japan as well as Hong Kong. Moving on to the corporate action that we should keep an eye out on in India. HPCL, BPCL both are to issue bonus shares. Keep an eye out on that. Premier Explosive is to see a stock split that will be happening. And do not forget, it's the last day to buy shares if you want to be eligible for dividend of Tata Steel, Arkin Chemical, Green Lamp Industries, Bajaj Finserv, Bajaj Finance. Keep an eye out on those stocks as well. Moving on, we also have IPO action, a lot of IPO action that still continues. We're seeing Stanley Lifestyle IPO that is going to be opening today for subscription. We have DEE Piping Systems that closes for subscription today is the last day, as well as Asan Loans IPO also closing for subscription today. Like I mentioned, let's keep an eye out on an important event is that FTSE and Sensex rejig that will be happening today. Keep an eye out on those updates and all the stocks that will see inflows and outflows on the back of that. Surely we'll see a bit of a move there. International Yoga Day, Music Day, we are keeping an eye out on. PM Modi will shortly be addressing Yoga Day celebrations in Jammu and Kashmir, and obviously he's going to be laying a lot of foundations of multiple foundations and projects that will be in Jammu and Kashmir. 1,500 crores worth of development projects is what we're watching out for. Other than that, agriculture and allied sector projects of 1,800 crores is what PM Modi will be launching. Keep an eye out on all of that. And other than that, moving on to just some update that is on the global front commentary. Richmond Fed President Tom Birkin will be speaking late this evening, so keep an eye out on all those important events today.
Absolutely, lots to watch out for. We'll be keeping a close eye on all of these market as well as non-market events. Interesting lineup of events today. But let's kickstart the coverage of global stories this morning, and let's talk about what Bank of England has done. Bank of England has held rates steady at 16-year high of 5.25%. Policymakers describing the decision as a finely balanced one. This after inflation in the UK hit the central bank's 2% target. Officials again said that monetary policy needs to remain restrictive for sufficiently long to return inflation to the 2% target sustainably. Now do remember, the decision to hold comes just 2 weeks out from a general election in which the state of the economy and proposals for rebooting sluggish growth have emerged as key battlegrounds.
Moving on to some commentary that we have from the Fed side and in the US. Fed's monopolist president Neil Kashkari says that it would be in fact take up to 2 years to get the inflation back to that central bank's medium target. Additionally, he said that the wage growth is too high to see inflation back to 2% target. He also largely alluded that to only one rate cut this year, and that they are waiting until December to do it. So do not expect a rate cut anytime soon, not even in October. Clear indication coming in from the monopolist Fed president.
Alright, a slight bit of a hiccup coming in for Nvidia just yesterday, but that doesn't negate the fact and the moves that we've seen for Nvidia, because that up move has been like no other. It has no end. The chip maker's market value has now ripped past the entire country's stock markets in Europe. Investor enthusiasm for stock turned the maker of artificial intelligence chips into the biggest US company as it swelled to a market value of more than $3.3 trillion. According to a Deutsche Bank Bank report, the company's market value has doubled this year after tripling just last year. It has added a whopping $1 trillion in market cap, more than Warren Buffett's Berkshire Hathaway in 23 trading days since May 20.
Okay, let's move on and talk about the global IT bellwether. We had Accenture that has once again actually narrowed its revenue guidance to 1.5 to 2.5% range in their local currency. The IT giant saw its Q3 top line rise by almost 4.2% on a quarter-on-quarter basis. Accenture's generative AI new bookings also in the third quarter came in over $900 million for the quarter. What is the other major highlights that's coming in from the IT major? Because clearly you always do get an indication in terms of how Accenture performs and how Indian IT companies are expected to perform. Revenue guidance cut is something we're watching out for. What are the other details? Let's go across to Ashesha, who's read up on these fine prints there. Ashesha?
Well, absolutely. And third quarter numbers are slightly lower than what the street was working with, but their order inflows for the quarter gone by have been very strong. First up, let me take you through the numbers that they've reported for the quarter gone by. Revenues have come in at $16.47 billion versus estimates of $16.65 billion. So that's lower than what the street was working with. EPS and adjusted EPS for the quarter have also been lower than what the street was working with. But as I mentioned, order inflows for the quarter gone by have been very strong. So company reported consulting new bookings at about $9.3 billion versus estimates of about $8.97 billion. So that's a green flag as far as the results are concerned. Order bookings have been very strong this time around. Let's also talk about the guidance that the management has given for the fourth quarter of this fiscal and for the full year. So for the fourth quarter of this fiscal, they are penciling in revenue growth of about 2 to 6%, and in absolute terms, revenues could come in anywhere between $16.05 to $16.65 billion. So for the fourth quarter, 2 to 6% revenue growth is what they are penciling in. Now for the full year, they've narrowed their band. So earlier they were expecting revenue growth of about 1 to 3%, which has now been narrowed to about 1.5 to 2.5%. So no major disappointment as far as full year guidance and fourth quarter guidance is concerned. All in all, numbers have been lower for the third quarter, but for the fourth quarter guidance, there's no disappointment, and order inflows in the quarter gone by have also been very strong.
All right, Ashesha, thanks so much for taking us through that. But we also caught up with Rahul Jain of Dolat Capital to get more on the earnings outcome and what he's making of these numbers. Listen into what he had to say.
As we have seen, the guidance for current fiscal has been very weak for the companies that give explicit number, be it Infosys or HCL Tech. And if they don't surprise positively during the earnings season, all the momentum can gradually fizzle out. There is a significant need of investment to be done by corporates on the digital transformation and other in achieving the right data set and reskilling the people, which is required before a meaningful outcome can be generated out of a Gen AI proposition. So Gen AI, rather being a risk or threat for now, can act as a big catalyst for incremental IT spend in the short term and may possibly become a threat in a longer term basis.
All right, well, let's keep it going with these Accenture numbers, and we have a report from Morgan Stanley this morning coming in on Accenture, and here's what they have to say. There's few positive data points such as the strategy in consulting returning to growth and pick up in smaller deals. They also see this as another confirmation of the bottoming out of growth rates. This is what Morgan Stanley believes. Now, they're also seeing some signals of a return of discretionary spending, but these are still elusive, it is what Morgan Stanley has to say. They also believe that the revenue growth recovery for Indian IT services companies likely to be gradual. It's going to happen over a period of time, and marginally positive for sentiment towards India IT stocks is what Accenture's numbers could pan out to be. So this is what Morgan Stanley has to say on Accenture's earnings. They believe it is marginally positive for Indian IT stocks as well. So on the back of these numbers, the entire Indian IT pact or Nifty IT in particular, and all of these individual IT companies will be in focus. We'll want to watch out today.
Absolutely keeping an eye out on that one, but let's move on and talk about what's happening today. Like I mentioned, it's International Yoga Day, so from Kashmir to Kanyakumari, the entire country will be celebrating International Yoga Day with the theme Yoga for Self and Society, marking the 10th International Yoga Day. Prime Minister Narendra Modi is also all set to perform yoga in a special event that is organized in Srinagar, and it is expected that more than 7,000 people from different walks of life will join PM Modi on the banks of the Dal Lake to perform yoga. Meanwhile, Union Home Minister Amit Shah is also likely to attend the celebrations in Gujarat. You can see those visuals on your side that, everyone's already started. So let's keep an eye out on that. Those were the live visuals that we had. But let's keeping an eye out on International Yoga Day today.
Alright viewers, on that note, we'll slip into a very short break on this edition of Market Cafe. When we return, we'll take a look at how the Asian markets have opened up and talk more about what's been happening globally, so you stay tuned. Hi there, welcome back. You're still watching Market Cafe on ET Now. Let's take a look at what the Asian markets are up to, and most Asian Pacific markets are trading lower after Japan's May core inflation data came in slightly cooler than expected. Now, Japan's core inflation rate, which strips out prices of fresh food, came in at 2.5%. A Reuters poll of economists expected the May core inflation reading to come in at 2.6% compared to April's 2.2%. Now, Japan's headline rate rose to 2.8%, which is higher than April's figure of 2.5%. Another factor to watch out for when it comes to Japanese markets is the yen has weakened for a 7th straight day, weakening to 159 against the US dollar. On the back of all of these factors, as of now, Nikkei seems to be holding up pretty well, 0.1% higher, almost a 44-point uptick coming in for Nikkei as of now. On the flip side, let's take a look at what South Korea's Kospi is up to, because that slipped almost 0.8% on open, continues to languish over there. Almost a 1% cut coming over there for Kospi, 25 points lower is where that index is. Let's also take a look at what ASX 200 is doing, because it was nominally in the red when it opened, but is right there, not much to worry about, because just a 1-point cut coming in for ASX as of now, very flattish moves coming over there. Shifting focus, let's talk about an index that's deeply in the red as we speak as of now, and that is Hang Seng. As you can see, 1.2 points lower, a 225-point cut coming in for Hang Seng, very sharp cut coming in for Hang Seng as of now. Lastly, let's also take a look at what Shanghai is up to as of now. And you have Shanghai on the screen, that is down 0.1%, so rather flat moves coming over there as well. So other than Nikkei, all of these indices are in the red. Australia and Shanghai barely in the red, but nonetheless slightly tempered moves coming on both of those indices as well. Shifting focus to what we did back home yesterday, we ended the market at 23,567 is where we've closed, implied at 23,603, indicating a flatter start for us, but with a slightly positive bias. So we'll just have to wait and see what the markets look like, because the global handover this morning is rather mixed.
Absolutely, a mixed global handover is what we've seen coming in. But let's move on. And the Chief Minister of Karnataka, Siddaramaiah, along with the Minister of Large and Medium Industries and Infrastructure Development, M.B. Patil, announced the upcoming Global Investor Meet 2025. The theme for the edition is Reimagining Growth, will be held on February 12th to 14th, 2025 at the iconic Bangalore Palace. The dynamic 3-day event is expected to feature over 100 diverse speakers, over 30 technical and cultural sessions, and attendance of over 5,000 senior delegates. My colleague Shrija MS is bringing you the overview on the curtain raiser of the event.
Karnataka is a premier destination for global investments, being the second highest recipient of foreign development investment inflows in India, 22% in last 5 years cumulatively. The state is also a top achiever in ease of doing business index and an achiever in the Leads Index for logistics. We will focus on now areas of growth in line with the global trends to enable growth which is tech-driven, green, inclusive, and resilient. I would urge you to assist us in attracting a larger share of investments in the state of Karnataka to together achieve the goal of becoming India's manufacturing hub.
Invest Karnataka 2025 to be held from 12th to 14th February at Bangalore Palace. The event will propel Karnataka towards attracting more investments and generate enormous employment for the people of Karnataka. As you might be aware, Karnataka is the leading destination for global investments, being the second highest recipient of foreign direct investment inflows in India, 22% in last 5 years cumulatively. The state also leads in total exports across all Indian states and ranks first in the India Innovation Index with more than 400 global capability centers, R&D centers located in its capital city of Bengaluru.
All right, moving on in other news, the 53rd GST Council meet is scheduled to be held tomorrow. Now, sources suggest that the major discussions held will be around amendment to GST laws, rate rationalization and restructuring, and review of GST applied on a number of sectors, online gaming being one of them. The GST rate of 28% was applied to the full value of deposits made by players in the online gaming industry from October 2023, while the industry had been paying tax at 18% on platform fee prior to that. Authorities had issued 71 notices citing evasion of GST prior to October 2023 to different online gaming companies. The online gaming industry is hoping that the GST Council will come out with a resolution to amend or repeal the retrospective tax demands, which will lead to further growth of the sector, since the retrospective tax demand will be a fatal blow to many players in the space.
On that note, we're going to step into a very short break. Don't go anywhere. After the break, we'll be back and we will be taking all those important stocks that will be in focus and more domestic news.
Hi there, welcome back. You're still watching Market Cafe on ET Now. Now, let's go across to my colleague Anurag Shah on the occasion of International Yoga Day. Now, with the theme of Yoga for Self and Society, this marks the 10th International Yoga Day. PM Modi is also going to be taking part in this. Anurag, give us the latest on what you're getting on this event and tell us at what magnitude are we expected to see celebrations today?
So right now I am in a Charkop area of Mumbai, and you can see behind me the Yoga on Street program going on, and Union Minister Piyush Goyal, Union Commerce and Industry Minister Piyush Goyal is also performing yoga on stage, and yoga on street. You can see on this street that hundreds of people are performing yoga on the occasion of 10th International Yoga Day. So Piyush Goyal is also performing because from this constituency, recently Piyush Goyal has won election, and first time he has won Lok Sabha election. So in this program he is participating, and as you know that this year we are celebrating 10th International Yoga Day on the recommendation of PM Modi only. In UN announced 21st June as an International Yoga Day, and every year since 2015 there was a theme for Yoga Day celebration, and on a large scale country has celebrated yoga every year. There were different themes: yoga for peace, yoga for health, yoga for heart, yoga for family. Like these themes were there, and in last 10 years we have celebrated yoga in different themes, and encouragement has gone up over the years about the yoga. Participation has increased from children to senior citizens. Everybody is coming out and participating on International Yoga Day, and you can see it's raining from last half an hour. It's raining, but still the enthusiasm is there for the Yoga Day celebration.
Anurag, you know, despite the rains, the enthusiasm is there, and you are also present there. But do stay on with us, because you do have some updates that's coming in terms of the GST meeting on Saturday, and what we're learning also is some important announcements on the insurance sector. What is it that one is expecting from this GST meet?
So after a very long gap, GST Council meeting is happening, and there are few announcement or clarity is expected on general insurance front, because as per our sources, general insurance companies officials also been called to participate in GST Council meeting, and as per our sources, clarity regarding two major issues which industry is facing is likely to be given in GST Council meeting. First is GST on salvage deduction. So presently insurance companies are not deducting GST on salvage deduction, but GST department is taking this as a sales and taxing them at 18%. A couple of companies has received tax demand notices last year in August 2023. ICICI Lombard listed player also received a tax demand notice of 273 crore. So that this is a major issue general insurance industry is facing. So GST Council is likely to give some clarity on salvage deduction. And another issue is on co-insurance, GST on co-insurance premium. There are around 15,000 crore tax demand notices has been sent to 20 general insurance companies. Insurance companies also approached to Bombay High Court on the GST tax demand notices because insurance companies are saying that GST on co-insurance will lead to double taxation, and they are already paying GST on insurance premium. So co-insurance GST will lead to double taxation. So industry is hoping for clarity on co-insurance premium GST also. So the clarity on these two issues will bring relief to general insurance companies. And other than that, there is a major demand of general insurance industry about the reduction on GST on health insurance premium. The demand is there to reduce GST from 18% to 12%. So companies are expecting some sort of relief on that front also. But as per our sources, two major issues. One is on GST on co-insurance premium, and GST on salvage value deductions are likely to be taken up in GST Council meeting, and companies will get a clarity on these two issues.
Right, Anurag, thanks so much for taking us through that. I understand on the back of this expectation, all key insurance players, motor, life and health insurance players are going to be in focus. So we'll keep a close eye on all of those, that bucket of stocks as well. Moving on, Finance Minister Nirmala Sitharaman has chaired a pre-budget consultation meeting with financial market players. My colleague Ankur Mishra is here with more details on what was discussed in the meeting and the key takeaways. Ankur, take it away.
Yes, in a meeting held with Finance Minister, capital market industry representatives have suggested increasing STT, meaning securities transaction tax, on high frequency traders that is done in FNO. We also tried to understand whether or not there was any suggestion for discouraging retail participants in FNO through taxes, but we have been informed through sources that there was no such discussion which happened between Finance Minister and financial sector representatives. In fact, a suggestion was given to launch Jan Nivesh campaign for creating financial inclusion awareness. That was one of the suggestions which was given by the capital market industry. Remember, there was a comment which was given by Reserve Bank of India Governor Shaktikanta Das on increased volumes of future and options, and he mentioned that RBI and SEBI are monitoring the same. As far as the volumes of FNO is concerned, if you talk about last 5 years, it has increased over 23 times. There was also a study by Securities and Exchange Board of India which had mentioned that retail incurs over 90% of losses the times of trades which is done in FNO. So all in all, the wide anticipation was that there will be some taxes which will be levied to discourage the retail investors in future and option. But for now, the industry has suggested the tax increase of tax in STT for high frequency traders.
Thank you so much for that. But let's move on and talk about what's happening there. The Chamber of Commerce and Industry President Samir Somaiya put forth the industry body's suggestions on green transition projects to FM Sitaraman. Listen into the conversation they had with my colleague Prakash.
Looking forward, we have to also look at adapting to climate change. And as India grows, how do we fuel our growth with a greater transition to green? We also talked about how we should look at innovation and how we could jointly think about India looking at a porosity of, say, education, innovation, research, industry, services, how we could all work together so that India looks at its needs of today and also its needs in the longer term.
So any specific recommendation on taxation front?
We talked about simplifying direct taxes, indirect taxes. We talked about.
And last question on, of course, the new thermal capacity addition. That the government has made a commitment to come out with the 80,000 megawatt capacity of new thermal power projects. So do you think that it will work as a deterrent in a way of green transition projects and ambition that the government is carrying out?
I think India has to grow. It has, as India grows today, our per capita consumption of electricity is hardly 8,000 units, whereas if you look at the developed world, it's about 90,000 units. So India has to meet its growth of, electricity, power, energy as it grows. The transition will happen in parallel. So as we meet our need for resources, policies needs to happen so that we accelerate the green transitions.
All right, let's move on. And another set of suggestions for this meeting came from the venture capital and private equity ecosystem to encourage the domestic insurance and pension funds. My colleague Sumita is here with all the details on all of these suggestions and what these players have put forth in front of Nirmala Sitharaman. Sumita.
In fact, as part of these pre-budget consultations that have been happening with the finance minister, industry stakeholders from the PE and VC ecosystem have also aired their demands. In fact, of the several suggestions that they have put, they want the mainstreaming of AIFs, alternate investment funds. In fact, they've also asked for encouragement and for a large domestic capital. In fact, they should have large domestic pools of insurance and pension funds that can participate in the AIF industry, and that can further finance infrastructure and credit and startups. In fact, they've also asked for operationalizing the 2022 budget announcement of blended finance as well through a fund of funds approach, which has been taken earlier as well. They've also asked that AIFs should get tax parity and clarity like FPIs so that the industry can minimize tax litigation and that can result in ease of doing business. In fact, they've also asked to make India an asset management hub like Make in India program. In fact, they've also asked for managing India for global capital. So overall, the big demand or the big suggestion that's gone on to the finance minister is that domestic pool of capital should be made available, should be encouraged to counterbalance any drop in foreign funding in the country whenever some global activity happens, and that ends up having an impact on the Indian funding ecosystem as well. So overall, they've asked for encouragement to domestic pension funds, insurance funds, which are not really investing in Indian companies as much as they should be.
Okay, thank you so much for that, Sumita. But PM Modi-led NDA government in its very first cabinet meeting took many decisions that were aimed for the welfare of the farmers and the agriculture sector. The centre made its intention clear that it is committed for the progress and transformation in the agriculture sector, and the same is surely going to reflect in the Agriculture Ministry's 100-day roadmap. Sources indicate that the major focus is going to be on making Bharat Atmanirbhar Bharat for pulses and reducing dependency on imports. Listen to what Samir is getting on all of this. Samir?
The Agriculture Ministry 100-day roadmap focuses on to improve and enhance the pulse production in the country and also to reduce the import dependency for the edible oil. But we are picking up from our sources that government is likely to come up with a new policy that aims to encourage the pulse production and largely to achieve a self-sufficient Bharat for pulses by year 2027, and for this government is likely to come up with a new policy. In addition to this, the government is also willing to come up with a SOP and a standard operating procedure when it comes to define that what sort of crop cultivation, and specifically the pulse cultivation that government is looking at, and what sort of incentivization government will bring in for encouraging the farmers to shift to the production of pulses. Also, government is looking to come up with a assured offtake of pulses. So this sort of assurance might be given to the farmers that if they shift their crop production to pulses, then assured offtake can be given in. For this, the farmers have to go in for a pre-registration on the government portal. Currently, government focuses that the farmers, those who are there in rice cultivation, if they shift to the pulse, then this sort of assured offtake can be given in. The government will also look into provide the essential support in terms like providing a better and high yielding seeds, also some sort of subsidy-based electricity or power that government might provide. So these sort of plans that government has set in, but largely the goal is that when it comes to the tur dal or pulses specifically, the government is looking to achieve a self-sufficient, self-reliant Bharat by year 2027, and also to reduce the dependency on the import of edible oil.
All right, thanks so much for taking us through that. But with that, we'll slip into a very short break on this edition of Market Cafe. We'll be right back with more stock-specific news and action, so you stay tuned.
Welcome back. You're watching Market Cafe on ET now. Let's keep it moving and actually talk about the important stocks that you should be keeping on your radar today on the back of news flows. Jinna is joining in with us as always. Jinna, good morning. And what are the stocks that one should be keeping on their radar?
Well, as good morning. So, on the back of block deal sources says that Ester DM will be in focus. Olympus Capital Asia is looking to sell up to 5% with an option to increase this selling up to 10%, equating to total issue size of about 835 crores to 1,670 crores. Now, the price for this block deal is expected at rupees 331, which is a discount of 7% if you compare it to current CMP rate. Also, Religar Enterprises will be in focus as company has made a statement on a show cause notice issued by SEBI. Company says that they remain committed to completing their open offer. Also, GR Infra projects will be in focus as the construction of 8-lane carriageway in Rajasthan has been successfully completed with a total contract price of about 1,071 crores. GE Power India is next stock to be focused on, receives letter of intent from NTPC GE Power Services for consideration of 243 crores. Also, Spandana Spurti will be another stock in focus as they have approved issuance of NCDs on private placement basis, aggregating up to 75 crores. And lastly, Amar Raja Batteries company invests 20 million euros to increase the stake in European battery College Innovate.
Thanks so much for taking us through that. But while you're with here, also talk to us about an IPO that's opening, and you've been tracking this one closely. It's the Stanley Lifestyles IPO that I'm talking about. Tell us a bit more about the company and everything else that you know and you've read up about this.
Well, yes, so let's talk about Stanley Lifestyles IPO. Well, if you talk about IPO details, the date will be from 21st June to 25th June. The price band for the IPO is about 351 rupees to at a higher IPO band of about 369 rupees. The total issue size will be 537 crores, which out of which fresh issue is about 200 crores and offer for sale is 337 crores. Now, with this, the implied market capital comes up to 2,104 crores. If you talk about more about the company operates into super premium to luxury furniture brand in India. According to sources, company is the 4th largest player in home furniture segment in India based on their FY 2023 revenue. Also, if you look at company stores, that they have a total operating stores of about 62, out of which company owned and company operated are 38 and franchisee owned and franchisee operated are about 24. Now, more on objects of the issue, the company is investing, raising funds mainly for two reasons. First is investment in subsidiaries to open up more stores, anchor stores and renovation of their existing store. And second is for capex requirements for new machinery and equipments. Also, if you look at the financials, the revenues from FY 2021 to FY 2023 has grown with a CAGR of 46%, whereas the net profit from FY 2021 to FY 2023 has grown at a profit CAGR of 326%. Also, if you look at 9 months FY 2024 revenue, it stood at 313 crores, whereas the net profit stood around 18.7 crores. And lastly, if you look at anchor investors, the company just had anchors invested ahead of IPO, and some of the investors include SBI, Nippon, HDFC, among others.
Thanks so much for that, Jinay. But we do have the Prime Minister Narendra Modi, who is celebrating the 10th International Yoga Day in Jammu and Kashmir, Srinagar, and he is talking. And let's go across and listen into what he has to say.
कश्मीर की धरती से योग दिवस की बधाई देता हूं। साथियों, इंटरनेशनल योगा डे 10 वर्ष की ऐतिहासिक यात्रा पूरी कर चुका है। 2014 में मैंने यूनाइटेड नेशंस में इंटरनेशनल योगा डे का प्रस्ताव रखा था। भारत के इस प्रस्ताव का 177 देशों ने 177 समर्थन किया था और ये अपने आप में एक रिकॉर्ड था। तब से योग दिवस लगातार नए रिकॉर्ड बनाता जा रहा है। 2015 में दिल्ली में कर्तव्य पथ पर 35,000 लोगों ने एक साथ योग किया। ये भी एक विश्व रिकॉर्ड था। पिछले साल मुझे अमेरिका में यूएन हेडक्वार्टर्स में योग दिवस के आयोजन का नेतृत्व करने का अवसर मिला था। इसमें भी 130 से ज्यादा देशों के लोगों ने भाग लिया था। योग की ये यात्रा अनवरत जारी है। भारत में आयुष विभाग ने योग प्रैक्टिशनर्स के लिए योगा सर्टिफिकेशन बोर्ड बनाया है। मुझे खुशी है कि आज देश में 100 से ज्यादा बड़े संस्थानों को इस बोर्ड से मान्यता मिल चुकी है। विदेश के 10 बड़े संस्थानों ने भी भारत के इस बोर्ड से मान्यता प्राप्त की है। साथियों, आज पूरी दुनिया में योग करने वालों की संख्या निरंतर बढ़ रही है। योग के प्रति आकर्षण भी बढ़ रहा है। योग की उपयोगिता के संबंध में भी जन सामान्य कन्विंस हो रहा है। मैं विश्व में हर जगह जितने भी ग्लोबल लीडर से मिलता हूं, जहां भी जाता हूं, शायद ही कोई एक आध मिल जाएगा जो मेरे से योग की बात न की हो। दुनिया के सभी वरिष्ठ नेता जब भी मौका मिलता है मेरे से योग की चर्चा जरूर करते हैं और बड़ी जिज्ञासा से सवाल पूछते हैं। दुनिया के कितने ही देशों में योग डेली लाइफ का हिस्सा बन रहा है। मुझे याद है मैंने 2015 में तुर्कमेनिस्तान में योग सेंटर का उद्घाटन किया था। आज वहां योग बेहद पॉपुलर हो चुका है। तुर्कमेनिस्तान की स्टेट मेडिकल यूनिवर्सिटी में भी योग थेरेपी को शामिल किया गया है। सऊदी अरब ने तो योग को अपने एजुकेशन सिस्टम में भी शामिल किया है। मंगोलिया में भी मंगोलियन योग फाउंडेशन के तहत कई योग स्कूल चलाए जा रहे हैं। यूरोपियन देशों में भी योग का चलन तेजी से बढ़ा है। जर्मनी में आज करीब 1.5 करोड़ लोग योग प्रैक्टिशनर बन चुके हैं। आपको ध्यान होगा इसी साल भारत में फ्रांस की 101 साल की एक महिला योग टीचर को पद्मश्री अवार्ड दिया गया था। वो कभी भारत नहीं आई थी, लेकिन उन्होंने योग प्रचार के लिए अपना पूरा जीवन समर्पित कर दिया है। आज विश्व के बड़े बड़े इंस्टीट्यूशंस और यूनिवर्सिटीज में योग पर रिसर्च हो रहे हैं, रिसर्च पेपर पब्लिश हो रहे हैं। साथियों,
All right, that was PM Modi live from Jammu and Kashmir talking about Yoga Day today and also the expansion of yoga not only in India but across the world, across Mongolia, France and other nations, and how yoga has taken over the global stage. But on that note, viewers, we'll end the show. We'll bid you goodbye. It's a goodbye from Vinny and me and the entire team that put this show together. But as we do so, you still stay tuned to the channel because the market takes all the action.
If you like this video, then like, share and subscribe to ET Now.